Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing certain details about sinking fund and activities related to it. What sinking fund exactly means and how it is a part of depreciation will be discussed in this video. So when we speak about sinking fund, let us get to the basics of it first. Now, whenever an asset is procured, it has certain useful life. Now, whenever the asset reaches its useful life, it is supposed to be replicated or rather replaced, and a new asset is supposed to be got into its place because this asset will become obsolete. Now, whenever you're dealing with assets, these are high priced assets. The reason why being this is a one time investment that you're doing for a couple of years, and hence this much of amount is supposed to be in your cash flow whenever you're doing details related to procurement of asset. It happens most of the times that you have to keep your working capital blocked for all these things like procurement of assets, etc., etc. But however, this hampers your regular cash flow of your own business. So to avoid this thing, we keep some amount in safety, or rather we keep some amount aside so that that amount can be used for later on purposes like procurement of new assets if this asset becomes obsolete, etc. In certain situations like this, if you face any kind of error or if you face any kind of difficulties in arranging cash, then you take loans, but then it increases the liability. So what basically we do here is that whenever these assets are supposed to be procured in the near future, so what we do is that apart from the depreciation amount, we invest the similar amount into an investment fund. Now, this investment fund gives you certain returns. That returns is again added to the investment along with the depreciation that is charged every year, and that is again reinvested. So basically, to give you an example, you have a depreciation of rupees 100 on any asset. Now, the similar amount will be moved to investment fund, or rather that amount will be moved to investment fund, or rather investment fund itself. Now, when we talk about a specific fund that is created for usage of that specific depreciation, so this depreciation goes into this kind of fund. This kind of fund goes into this kind of investment funds rather. Now, this investment fund will lead to certain interest. That interest is moved to sinking fund. That means any kind of fund. Again, for the next year, this depreciation will be moved here, and cumulatively, this amount will be moved again to the investment fund, and that will reap another interest that will be added to the depreciation of the next year. And similarly, the process will go on. So, if you see that Lula loop, or rather, the loop goes on further extending until the end of its useful life comes into picture. Now, whenever the end of the useful life comes into the picture, this sinking fund investment is sold out, and whatever proceeds do we get is used for procurement of the new asset which is required, along with the old assets proceeds are being added to the sinking fund. So this is how the sinking fund works. Continuation of topic. So this is how the sinking fund works. Now, whenever such investments are being taken into picture, at that point of time, you need to understand there are certain investments that are made for the similar fund amount. Now, that investment will lead to certain interest, and that interest is again cumulatively added. So, if you have rupees 100 as depreciation, you have invested that into a fund, and that fund is further going into next investment. That means you took this depreciation off into a different kitty, and that kitty amount is supposed to be invested into certain kind of investment funds. Now, this investment will give you an interest of rupees 10 every year. So the total amount of here in investment is 100 plus 10 rupees of interest. Now this 110 will be moved to sinking fund back again at the end of the year, and again the next year depreciation rupees 100 will be added. So the total amount here is 210 rupees, which will be again reinvested into that investment fund, and the same cycle will keep going on. So this is how the sinking investment fund goes on. Let's understand with the flowchart that is prepared here, and we'll be able to understand what exactly we are talking about. So if you can see in the flowchart that has been mentioned here, we understand that it is categorized into 2 years, year 1 and year 2. Now, if you can see, year 1, we have taken depreciation as rupees 100, which then goes into the sinking fund kitty. Now this 100 will further go into the investment for the first year. Here it will earn 10 rupees interest as per the assumption that we have made. So the total amount of investment and interest in this kind of investment that we have by the end of the year is 110 rupees. Now this investment will be further moved to sinking fund kitty again. So that will have 110. Now for year 2, sinking fund already has 110 in it. Now we add another depreciation for the second year, that is rupees 100. So the total of previous year's 110 plus this year's 100 depreciation gives you 210 will be moved to sinking fund investment, that is 210 rupees will be completely invested. Now this cycle will keep on running until the end of its useful life comes into the picture, and that's when this investment will be sold off and all the proceeds will be sent to the sinking fund kitty, and everything will be then moved to sinking fund kitty, post which we'll be able to figure out whether there is profit or loss, and accordingly we have to go ahead and pass on the journal entries for this. So I hope this is very clear with this kind of flow chart. Now let's go ahead and figure out what are the journal entries that we have to pass here. The first entry that we are talking about is the transfer of depreciation amount to sinking fund account. So that will be depreciation as an expense will be moved to a fund account. Now it is a fund account, hence it will have credit balance. So depreciation account debit to sinking fund will be the entry that will be passed here. Now the second entry that will be described, that means this depreciation for that specific first year has been moved to sinking fund. Simultaneously, that amount has been charged to profit and loss account as well because it is an expense for us. So profit and loss account will be debited and depreciation account will be credited here. So if you earlier noticed that we used to charge it to the asset account, but instead of charging it to the asset account, what we have done is that we have moved that same depreciation to sinking fund account. So hence, instead of depreciation to asset, we have mentioned it as depreciation to sinking fund in the first entry. And in the second one, that same entry has been moved to profit and loss account, but because it has to be shown as a dual effect here. So second effect will be profit and loss being charged. This is for the year 1 that we have done. Now for year 1, when we have the third and the last entry, that means whatever fund we have created, that has to go to further investment. That means we will be creating an investment fund account here. So that will be sinking fund investment account debit to bank account, because an asset or investment has been created, it will have a debit balance. And now that you are moving out this fund to the investment, hence bank account will be credited. So the entry that will be passed here is sinking fund investment account debit to bank account. Now this marks the closure of year 1 entry. Now from second year we'll be earning interest on it, and again the simultaneous entries will be passed. So interest earned and an interest moved to profit and loss account will be taken into considerations, and after that all these 3 entries will be passed again. So let's figure out year 2 entries now. So we can figure out, we have mentioned the next 2 entries as well. That means in the subsequent years, the first entry that you'll be charging here is the earning of interest. So bank account debit to sinking fund interest investment account, or rather interest on sinking fund investment account is the entry that will be passed. This is the entry that we have passed for earning the interest. Now, this same interest which has been earned will be then moved to sinking fund as per the process flow. So if you can see that we have mentioned these entries here as well, that means the same interest which has been earned in the previous entry, that is bank account debit to interest on sinking fund investment account, the next entry that will be passed here is interest on sinking fund investment account to sinking fund account. So this is the entry that will be passed. Now apart from these 2 entries, the first 3 entries that we had passed, that means depreciation charging, next profit and loss charging to depreciation, and third movement of that to sinking fund account will be also passed simultaneously for the subsequent years. So this category or this set of transactions of entries will keep on going until we reach the end of its useful life, where the sinking fund will be sold out, or rather the investment will be sold out and the proceeds will move to sinking fund. So this is the entry. I'll still reiterate all those 3 entries so that you get to know in subsequent years, apart from these 2 entries, which 3 entries are supposed to be passed. So these 3 entries are supposed to be passed in the subsequent years, apart from the interest earned and interest moved to sinking fund account. Now, this is about sinking fund subsequent years. What happens when you reach to the end of its estimated life? Now, there are certain different kind of entries that you have to mention there. Let's figure it out. So when there is sale of any sinking fund investment account, this is the entry that you're supposed to pass. We have highlighted two options here. The actual entry is bank account debit to sinking fund investment account. This is the actual entry. But if there is a profit on sale of this investment, then sinking fund account is supposed to be credited. So the entry will be bank account debit to sinking fund investment account to sinking fund account. That sinking fund which has been credited is for the profit amount. But on or if sale of this specific investment gives you loss here, then same sinking fund will be debited. So the entry will be bank account debit, sinking fund account debit to sinking fund investment account. So this is the combined entry that we have passed here, and hence I've highlighted there. So if there is loss, sinking fund will be debited, and if there is profit, sinking fund will be credited. However, the base entry, that means bank account debit to sinking fund investment account, remains the same. Now, let's figure out the other two entries mentioned here. Now, at the end of the financial year, or rather, we can say at the end of the useful life, you also have to transfer the asset to the sinking fund. That means the book value of the asset will be transferred to the sinking fund account. So, here, this is what the entry is supposed to be passed. Sinking fund account debit to asset account here. Asset has debit balance. It has been credited here. That means that asset has become obsolete, and the book value of that asset will be further moved to sinking fund account. After you have moved the asset to sinking fund account, the last step that remains is to tally the sinking fund. So if there is any surplus in sinking fund, rather when you can say that sinking fund has credit balance, there is more of credit side, that amount will be transferred to general reserve. So sinking fund account debit to general reserve account will be the entry that is passed. However, if there is deficit, that means debit side is more as compared to the credit side, the deficit will be moved to profit and loss account. So the entry here will be profit and loss account debit to sinking fund account. Now, this is how the entry for sinking fund will close. So I hope all these details or all these journal entries give you a lot of clarity as to how a sinking fund account is supposed to be opened, what all entries are supposed to be passed, how depreciation affects sinking fund account, what is the reason why we have created sinking fund, and how in the closing years, that means at the end of its useful life, sinking account or sinking fund account is closed and further moved for procurement of the new asset. So these are the detailed entries that you have to understand and have to clear out whenever a problem of sinking fund arises. So I hope this video gave you a lot of clarity about sinking fund issues. In the next video, we'll be understanding with an illustration problem on this. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.